What's going on, guys? This is Diamond Trades from Kane Capital, and today we're going to cover how I use unusual whales to add conviction to my day trades. This is our first video of April, and we've got at least 2 to 3 additional videos coming out this week. So make sure that you subscribe to the Kane Cap account so you don't miss any of those. A lot of stuff coming up this week in particular. So make sure that you subscribe. In our last video, we covered unusual whales. Definitely check that out. I'll link that in the notes for you guys. But a lot has changed on the platform since then. And so I think an updated video will give you guys a better understanding of some of the new updates that they added to the platform and give you some recent examples from this past week, including 3 examples of trades that I actually took and alerted in our Discord. And so without further ado, let's jump right into it. Like I mentioned before, Unusual Whales has made several updates to the platform since our last video. And so I think going over a couple of those new updates would be beneficial. One of the primary things that they added, which I really appreciate, is if you click on this contract button right here, this hyperlink will go ahead and take you to a flow pop-up. And what they've done is they've added both the price of the contract and the volume of this in particular contract. So this one was the Apple 172.5 calls expiring this Friday, the 8th. You can see the intraday volume from Friday, April 1st, and you can see both the intraday volume and at what price the contract was traded. And so you can see throughout the day, contract started up here at 3.3, came down to 2.4, and you can see where most of the volume that day, buy or sell, took place, right? And so I think that that's really neat. And then they've also added on the side a graph of the stock price itself, right? So the underlying stock price for the options contract, also with the volume on the day for the stock price. And so this is something new that they've added. It allows you to quickly just jump in and see where most of the contracts were transacted and at what price the stock was at during that time, right? And so this visual representation really kind of makes it a little bit cleaner than what they've already have, right? They already give you both the spot price of the contract and I believe the underlying price that the stock was trading at. But I think that having that visual representation makes it just a little bit easier to understand and follow. Right. So that's one update that they added. And then the second update that they added is this little button right here. If you hit this stats chart, it'll bring you to another page. And so hitting that button will bring you to this pop-up page, which will give you essentially how you can add this contract to an options profit calculator. And what that profit calculator will do is essentially tell you, based off of what price that you got in, the break-even prices for your contract and what your profit and loss would be on a stock move up or down, right? And so this is a nice visual representation, particularly for newer traders who need to get a better visual kind of representation of what will happen to their options price based off of what the stock does in coming days, right? And so you can see here, as the stock price goes up, your contract will begin to appreciate, and then the opposite on the downside, right? And so I think that that's also something really neat for newer traders to kind of add that visual representation of how to better understand the movement of your options contract based on the underlying asset's price. And so again, those are just 2 of the new updates that Unusual Whales has included in this version 2, really spicing up the platform, making it much easier for both novice traders and experienced flow readers. So make sure that you check that out. Again, we've got code Kane Cap that you can use for new users to receive 10% off of their Unusual Whale subscription. And so make sure that you take advantage of that. But without further ado, let's go ahead and jump into the 3 examples that I've got for us today based off of the trades that I took this past week. All right, this is the first example of the trades that I took this week using this Unusual Whales intraday strategy. And so let's get going. We had pretty much a sell-off in the morning, right? Some considerable chop around VWAP and the EMAs. It looked like we rejected this move higher towards the high day, and we got a pretty significant drawdown to about midday noon time, right? Once we got to the bottom here, we bounced off very strongly, right? You can see that this rally really had no pullbacks except for really here and here. Really strong move off the lows. And that's the first thing that got my interest, right? We really had a powerful sell-off off the lows. And this, just to kind of add some context, was after SPY basically ripped since the 13th. This is now March 28th that we're looking at here. SPY basically vertical since the 16th. A lot of people are looking for that pullback, right? A lot of people are waiting for that sort of drawdown in SPY. And so what I immediately thought about was all the people who got short in this time frame right here. are now going to have to cover if we can really move higher and push over high day. A lot of people were anticipating that sell off, and if they get caught short, that could definitely lead to a rally into the afternoon. We did have some pretty significant resistance in the 453.5 range, and so I was cognizant of that as well. But seeing this move off the lows, that was my first indicator. We got the 821 crossover adding to my conviction, right? So that's now 2 levels of conviction that I've got in the trade. We trade over VWAP, reclaim VWAP on the day. And this setup looks really nice to me now to take a long into the end of the day, anticipating that high day break and that kind of rally higher, right? And so to do that, I'm waiting for a pullback, right? I'm sitting here all through this chop, all through this consolidation, kind of waiting for a pullback, a confirmation off of my 8 EMA, which is this dash line right here. Okay, we get the first one right here on this move. We got to bounce off the 8 EMA. I laid off just because we had so much consolidation beforehand that I didn't necessarily feel comfortable taking an entry here, right? But we did get the 8 EMA bounce here, got to move higher, rejected the high of this consolidation, again, bounced it off of the 8 EMA, and now closes over on the 5-minute, a close over the high of this consolidation, right? And so as I see that, I'm adding my 453 contracts expiring the same day, right on the close of this 5-minute candle right here, bounce off the EMA, close over of 5-minute close over the high of the consolidation, all of those things adding to my conviction, right? After the trade actually spiked up, was up about 20%. I was in fairly small size, and so I didn't take profits there, but we began to sort of sell off again. And I was thinking to myself, did I get in too early? Did I read the chart wrong? Am I anticipating the wrong move, right? And so I've got 3 or 4 levels of conviction on the chart. I move over to unusual whales to add some additional conviction to this trade. So let's go ahead and check out what it is that I was seeing. So this is what unusual whales would have looked like in the minutes leading up to my trade. Again, I added this trade at 2:05 in the afternoon, which is right in this zone right here. So right after this. So this is what I would have been looking at beforehand, right? I'm seeing a lot of 452s expiring that Wednesday, coming off with some pretty decent size. And additionally, I see a sweep here, which is generally bullish when it's performed on the ask. Again, if you guys will, we're going to go ahead and link the first video that I did talking about unusual whales and what it is exactly that I'm looking in the flow. But very quickly, just a recap of that video. One thing that I'm looking for in particular is sort of this repeat buying, right? The repeat buying in the same strike, same expiration with aggressive size shows me that somebody's trying to build themselves a pretty decent sized position by hitting the same strike over and over. That to me represents bullish activity. And so after seeing these 452s get hit in pretty decent size without much bearish flow, that's really what sort of added to my conviction into the trade. Right, even being down 25%, I was able to sort of have that conviction to hold on and stick with my technical, stick with the flow, and say, okay, I think that this one is going to move higher, which is ultimately exactly what happened. Again, that bullish flow continuing sort of after we had already broken out of this consolidation. We continue to see a move higher. We break over high a day, and I begin to scale out of my position after I'm up about 50%, 100%, and 200%. I'll go ahead and move this box down. Ultimately, we did wind up closing at the high of the day, well over 455, and these contracts were pretty deep in the money, able to secure a 200% gain, and they actually ran even further than that, closing the day at about 410% above my entry. And so that's just one way that I like to use unusual whales to add conviction. And in this trade, it worked out perfectly, right? I typically want to see the technicals on your chart matching up with that flow that you're reading from unusual whales. And so when I see those two things match up, that gives me additional conviction that my initial thought, my initial thesis of the stock rallying into end of day has some validity to it. So now let's go ahead and move on to setup number 2 that I took from last week using unusual whales. This one was on Thursday, March 31st. It was a SPY trade that we took going into the afternoon here. And I think that this chart will really kind of break down pretty simply what it is that I was seeing. We had some intraday support around 456.5 before rallying higher and rejecting high a day, right? So this was the previous high a day that we had set around the opening of the day. And we actually rejected this fairly strongly. You can see in the next few candles, we get some consolidation and then a break below the 821 EMA, right? This 821 EMA crossover right in this candle is one of the first things that puts me on watch, right? We have a high day reject, failed to hold the 821, and then we get an 821 crossover on the 5-minute. This 821 crossover is a short-term signal of a bearish trend, as we've talked about in our other videos. That's one of the favorite setups that we like to use. And so this is really my first primary indication of some bullish activity. We eventually get a bounce right here at 457.44. And now I'm watching this sort of sell off to see, okay, are we going to reclaim this 821 and continue to sort of chop around, or is this a new bearish trend on the day, right? That would be my second piece of conviction, right? And so we ultimately reject the 821 EMA yet again in these several candles right here, and actually close below this intraday support, right? So this 5-minute candle close here below this intraday support is what is my second piece of conviction, is ultimately telling me, okay, this is a trade that I want to take to the downside, and I want to target this low of day area right here. Okay, I want to jump in on this bearish trend and sort of ride this wave down until there is some support. Okay, and I'm expecting to see support at low a day and some other technical areas on the chart. As long as we're trading below this 821, I feel I'm in good shape. Okay, so again, I've got my two pieces of conviction. I've got this 821 crossover, I've got this break of intraday support, and I've got this 821 rejection, which was my third piece of conviction I added in this candle here. When you have the technicals and the flow both matching up, that is a green light, in my opinion, to sort of take this trade. We were able to catch this move to the downside, playing to low of day. I scaled out here for about 40%. We got this EMA reject right here again, ultimately breaking low a day, scaled out more for 60%. So at this point, I've scaled out for 40% and 60%. I think it was 2/5 of my contract left. I'm going to put my stop loss at entry, because if SPY decides to rally, I don't want to get caught in that rally. But at the same time, I do want to leave some on for the downside, right? If we continue to sell off, I want to be able to take advantage of that, right? I don't want to be out of my entire position. And so I'm going to sell more than half, and I keep the stop on my last 2/5 at entry, right? Ultimately, the stock rallies after setting a new low, and I got stopped out of my contracts, the last 2/5 of my contracts at entry, right? So 40%, 50%, 40% and 60% on the first half, and then the last 2/5 I got stopped at entry here. Ultimately, we did wind up selling off into the end of the day, and these contracts wound up going about 400%. And you know what, that's going to happen, but I would much rather protect myself on the downside than really beat myself up over what could have been, right? And ultimately, I did have the opportunity to reshort this at two separate occasions, both here and here, had I wanted to. And so, you know, it's not like, I think that that's one of the common misconceptions, is that you have to have proper risk management to even be able to get that first initial move. And then you can always get back in if you do see some additional bearishness, right? And so that's how this trade went. I was able to use unusual wills to add to my conviction. Again, when the TA and the flow are both matching up, to me, that's a green light to take the trade. Here it worked out successfully. All right, so here's the last setup that I took this week using the unusual whale strategy. This trade was a loser, and I felt that it would be unrealistic and unfair to kind of only show the winners, right? No strategy is going to work 100% of the time. This is an example of where both the technicals and the flow matched up, but the trade just wound up going in the opposite direction. And that's going to happen sometimes, right? And so we can talk about exactly what happened in this trade and maybe what I could have done to avoid taking this loss. So let's get into it. We had in the morning pretty much a flag setup, right? We were kind of setting higher lows, but also setting lower highs off of the open, and setting higher lows really is what was my first piece of conviction. Around the same time, both QQQ and SPY were having similar price action, but they were looking like they wanted to break out as well. And so I was closely watching Apple to see if it wanted to follow suit. It broke out of the consolidation, and ultimately I added here in this candle. We began to see some consolidation continue after my entry, right? We had the ADMA tap, we were trading above VWAP, setting lower lows. And so those three things were my conviction. And I said, okay, let me go ahead and check unusual whales flow and see, you know, if I can add an additional piece of conviction to this trade, particularly after I got in the next 5-10 minutes. We didn't really see the move that I was expecting. And so I said, okay, let me go see what the flow is saying and see, you know, hopefully I'm not trading on the wrong side of, you know, this trend, right? Or the institutional money. All right, so as we check the flow from basically the morning up until I took this trade at 10:45, my entry was at 10:45. I went and I checked out the flow, and it was fairly mixed, but I felt that it was leaning towards the bullish side. One thing in particular that I was paying attention to was right before, so my entry was right here in between these two at 10:45. I was focusing on these repeat hits of the 160s, same strike, same expiration, with pretty decent size, right? 200,000 for each of them. that to me piqued my interest, right? So again, in this example, we had flow that was relatively mixed, even though there was some strong flow here. It's not, particularly strictly bullish. We do have some mixed flow. The technicals were also mixed as well. So again, this is a trade where the flow was sort of mixed. The technicals were sort of mixed. We didn't have the 8 over the 21. We were over VWAP, but the 8 over the 21, both over VWAP, really would have shown me, give me a little bit more confirmation of this upward trend. We weren't necessarily setting higher highs. And so the technicals weren't screaming bullish, and neither was the flow. And so this is an example of maybe I was trying to see what I wanted to see, as opposed to objectively looking at the flow, looking at the charts, and then making my decision. Again, this was on a Friday, so this was a 0 DTE contract. I was in fairly small size, and so I had my stop loss set at 33% as opposed to my usual 20%, gave myself a little bit more room on the downside. Ultimately, it would not have mattered because we knifed down below VWAP, sort of breaking this upward trend, and then ultimately setting lower lows on the day. And so this is an example of where it was. So I think that this was a good trade to review, because sometimes, particularly in hindsight, you'll go back and you'll look at the charts and you'll look at the flow and say, oh, damn, how did I miss this? But at the same time, it may not be in the moment particularly clear. And so I think a framework that I'm going to sort of implement for myself is the chart really does have to be screaming bullish, which in this case, it was not. We weren't necessarily setting higher highs, even though we were setting lower lows. The flow has to be screaming bullish as well. We did get some nice 200K prints there right before my trade, but ultimately the flow was mixed on the day, particularly after a large sell-off the previous day. And so I think that the next time that I see this setup, I'm just going to have to be a little bit pickier about both the technicals and the flow before actually entering the trade. I do think that it's worth noting that Apple ultimately did rally towards the end of the day and wound up closing near the highs. And so this is something that we've talked about before, is that when you're trading so close to expiration, being early is the same thing as being wrong, right? That faded decay is ultimately going to eat up your contracts. And then if you do get that move at the end of the day, you'll be lucky to get back to break even, right? And so when you're trading 0 DTE, the entry really is important. And this is a trade where maybe had I taken 2, 3, 4 weeks of expiration, 2, 3, 4 weeks more time, I would not have gotten stopped out, and I would have been in a good position to catch that rally towards the end of the day. So that's something else to think about with this trade. So that's going to wrap up my examples for how I use unusual whales to add conviction to my trades this week. One thing I will leave you guys with is that no analysis is going to work in a vacuum, right? No technical analysis, no fundamental analysis, no flow analysis is going to work in a vacuum. You have to use all of these things together to sort of add layers of conviction to your trade, right? And that's exactly how I use unusual whales. I use it as a tool to add another level of conviction to my trades. When the chart and the flow are matching up to me, that presents a really good opportunity. So that's going to wrap it up for the examples this week of the trades that I took using unusual whales flow. Again, using the flow, using technical analysis, using whatever it is that you're using to kind of determine whether a stock is going to go up or down, none of those analyses are going to work in a vacuum, right? Your job as a trader is to stack levels of conviction. Those will ultimately be the decisions that lead to great trades, right? You can't just follow one particular indicator. You have to sort of use all of this in unison to stack as many levels of conviction as possible. And that's really what's going to lead to a great trade. If you enjoyed this content, make sure to like and subscribe to the Kane Cap YouTube channel. Again, we've got 3 or 4 educational videos coming out this week. And so make sure that you subscribe so that you don't miss those. Leave us some notes in the comments. Let us know how we did, and let us know how you're using unusual whales to add conviction to your day trades or swing trades throughout the week. Good luck this week, everybody, and we'll see you guys next time.